Interesting edition of the Market Review for 21st of July 2020, where you get all your financial and capital market developments as it relates to the economy. Let us give you a lineup of what we'll be discussing this morning. First, we'll be reviewing market performance from Nigeria Stock Exchange All-Share Index for yesterday. And Fidelity Bank has appointed a new substantive CEO. Access Bank's acquisition of Transnational Bank Kenya. Owando PLC's announcement on its 2019 and first quarter 2020 financials. SEC Nigeria haps on automation. We'll also be looking at Nasdaq's gains in performance and updates on the Asian stocks performance. It's D-Day for Financial Intermediation Operations and Practice Book launch. And of course, updates from the Coronation Capital Corporate Finance and Business Valuation online training series. First, we begin with the equities market, which closed yesterday on a negative note, as the NSE ASI depreciated by minus 0.07% to close at 24,269.58 basis points, as against minus 0.17% depreciation recorded previously. Its year-to-date returns currently stands at minus 9.58%. Market bread closed negative as GlaxoSmithKline led 12 gainers as against 13 losers, topped by Nemeth Pharmaceuticals. At the end of yesterday's session, it showed an improved performance when compared with previous outlook. Market turnover closed positive as volume moved up by plus 90.09% as against minus 22.58%, downtick recorded in the previous sessions. Sovereign insurance, UBA, and guarantee trusts were the most active to boost market turnover in terms of the performance for yesterday. In terms of the market value list, UBA and guarantee trust were the top players that boosted the market value list. Livestock PLC led the list of active stocks that recorded impressive volume spike at the end of yesterday's session. And let's get on to some interesting developments in the financial markets. Fidelity Bank notified the Nigeria Stock Exchange and general public of the impending retirement of Mr. Nnamdi J. Okonkwo, the Managing Director and Chief Executive Officer of Fidelity Bank PLC, from the Board of Directors of the bank. This will take effect from December 31st, 2020, upon completion of his contract tenure. In compliance with the succession policy of the bank, the board has approved the appointment of Mrs. Nneka Onyali-Ikpe, the current Executive Director, Lagos and Southwest Directorate, as the MD CEO designate of the bank, to assume office with effect from January 1st, 2021. The approval of the Central Bank of Nigeria has been obtained for the appointment. The board has also approved the appointment of Mr. Kevin Ugoke, the current Chief Risk Officer of the bank, as Executive Director and Chief Risk Officer, subject to approval of the Central Bank of Nigeria. That is the interesting news coming from Fidelity Bank. From Access Bank comes the information that sequel to its early announcement on October 28, 2019, the board has pleased to inform the investing public and the Nigeria Stock Exchange of its successful completion of the acquisition of Transnational Bank Kenya PLC. This follows the receipt of full regulatory approvals and fulfillment of all conditions precedent to its completion. Access Bank's vision is to be the world's most respected African bank, and its entry into the Kenyan market, a key gateway in East Africa, not only brings it closer to that vision, but enables its customers tap into an extensive global network that translates into immense business opportunities, robust and efficient digital solutions, competitive products, and unrivaled customer experience. That's coming from Access Bank, who has completed an interesting acquisition in East Africa. For Owando PLC, pursuant to the direction of the Nigeria Stock Exchange, it wants to update its valued shareholders and stakeholders on the delay in the release of its results, financial results for the 12 months ended December 31st, 2019, and also its first quarter 2020 management accounts, which is due dates of May 29, 2020 and June 29, 2020 respectively, as prescribed by the NSE rules on filing and accounts and treatment of default filing. On Monday, June 10, 2019, the Securities and Exchange Commission notified the public and Wando that further to the ex parte order of the Federal High Court, Ikoyi, Lagos, in suit FHC LCS 91019, in Mr. Jubril Adewale Tinubu's and Ano versus Securities and Exchange Commission and Ano, it had suspended the company's 2018 annual general meeting till further notice. Following SEC's suspension of Wando's AGM, the company has been unable to appoint auditors to commence the company's 2019 audit exercise. The mandate given to the auditors at the 2018 Wando AGM by the shareholders was to audit the company's full year results, that's 2018 financials, and not any other year. The suspension of the AGM has resulted in the following amongst other things: the inability of the directors to lay before the shareholders for approval the company's 2018 audited financial statements, the shareholders' inability to reappoint the auditors of the company to hold office for the 2019 financial year, the inability of the company to meet the full year expectation in terms of 2019 NSE filing of accounts and obligations within the due dates of March 31st, 2020. Wando PLC apologizes for any inconveniences caused and will update the market on the outcome of the above-mentioned case in due course. That's an interesting information notifying valued shareholders and stakeholders in the market. The Securities and Exchange Commission, the apex regulator of the Nigerian capital market, has expressed its desire to automate its processes in a bid to conform to current technological trends the world over, as well as ensure a more efficient capital market. Director General of the Securities and Exchange Commission, Mr. Lamido Yuguda, who stated this during a meeting with the Minister for Communications and Digital Economy, Dr. Issa Pantami, in Abuja yesterday, said automating most of the Commission's processes will also make the capital market more friendly to investors. Yuguda said, presently, we have a lot of documents and papers being brought to the Commission for one approval or the other. We think that if we can digitalize our processes and these documents, they're transmitted to us electronically, it will make it easier for the markets that we regulate and also stimulate growth. Speaking further, he said, if we can achieve that, it will also reduce cost and increase efficiency. That is why we are here to discuss with the Ministry of Digital Economy on areas we can work together to achieve this. The SEC board stated that the advent of COVID-19 has shown what can be achieved with technology, as during the period since March, the capital market has been working in spite of lockdowns and the effects of the pandemic. He added that remembering that when the lockdown started, the Commission activated its business continuity process, which saw staff of the Commission working remotely while all our electronic channels remain open to provide the necessary support to the capital market stakeholders. He further stated that they should also continue to disclose the trend and outlook for the company and updates on implementation of business continuity plans. Public companies are to publish these disclosures on their websites and on other relevant media. Giving further insight, he said, we also told public companies who plan to conduct annual general meetings to ensure that the conduct of the meetings comply with the provisions of the Companies and Allied Matters Act, the Investment and Securities Act, the SEC rules and regulations, relevant government and health circulars and guidelines issued in this regard. The SEC DG stated that it will continue to engage and collaborate with all stakeholders to ensure that the capital market remains resilient. Giving his own remarks, the Minister for Communications and Digital Economy, Dr. Issa Ali Pantami, expressed the readiness of his team to collaborate with SEC in automating its processes, adding that the present administration is committed to promoting a digital economy. He said, with this lockdown, we have seen the advantages of digitalization of processes. That is what has kept us going when everyone was locked down in their homes. We are currently at the forefront of promoting digital economy. He also said, we are very happy to look into areas that we can assist in digitalizing your activities, that's for SEC, to ensure a better capital market. Digitalization, according to the minister, will certainly make processes easier, and that is why it's committed to championing it. Dr. Pantami said even the Federal Executive Council has embraced technology as its meetings are now held virtually due to COVID-19. According to him, Mr. President has embraced it fully, and same with the Honorable Minister for Finance, Budget and National Planning, Mrs. Zainab Ahmed, who is very passionate about technology, and we know that she will support SEC in this drive. It is even safer to automate and there is no better time than now to do it. We need to sit down and brainstorm on the model that will work well for SEC and come up with modalities on how to deploy it, he added. Interesting steps by SEC to automate processes, which we believe will drive efficiency in the Nigerian market. Let's get to Wall Street, where, of course, you know how massive the market is. Wall Street gained ground on Monday yesterday, and surging technology shares pushed the Nasdaq to a record closing high as promising trial results from potential COVID-19 vaccines helped investors look beyond spiraling new cases of the disease. Amazon.com Incorporated and Microsoft Corporation provided the biggest boosts to Nasdaq and the S&P 500, but industrials retreated, capping the Dow Jones nominal gains. Deaths in the United States of America from COVID-19 passed the 140,000 mark over the weekend as cases continue to rise in 42 of 50 states. Trials of potential vaccines have shown promise, most recently drugs from AstraZeneca, CanSino Biologics Incorporated, and from a partnership between Pfizer Incorporated and German biotech firm BioNTech were safely administered and induced immune responses. Developments on COVID, positive or negative, have become the new risk or risk of binary trigger for the market, said Joseph Stroker, Chief Investment Officer at Nova Point in Atlanta. A year ago, it was trade. In the next few weeks, there will start to be risk assessments made on how the size of the next round of financial stimulus occurs, that's Stroker added. The U.S. Congress, on its part, is looking to mitigate the pandemic's economic effects and is set for a week of partisan wrangling over a new relief package with 2 weeks until enhanced jobless benefits expire for millions of Americans. The Dow Jones Industrial Average rose 8.92 points, or 0.03%, to 26,680.87 basis points. The S&P 500 gained 27.11 points, or 0.84%, to 3,251.84 basis points, and the Nasdaq Composite added 263,090 points, or 2.51%, to 10,769.09 basis points. Of the 11 major sectors in the S&P 500, consumer discretionary and tech enjoyed the largest percentage gains in the market. That's coming from the large U.S. Market and its operations. Let's get to the Asian stocks and how Asian stocks have been performing. Asian stocks look set to climb after a technological rally lifted their U.S. counterparts to the highest since February. The dollar weakened to an almost 6-week low. Futures indicated a firm open in Japan, Australia, and Hong Kong as the S&P 500 contracts were little changed in Asia after the benchmark turned positive for the year. With yesterday's rally taking it to the levels last seen just as the pandemic was starting, the Nasdaq 100 jumped the most since April, hitting a record high after Amazon.com and Zoom Technologies soared on demand for companies that benefit from diminished economic activity. Treasuries pushed higher. Investors are keeping an eye on Washington, where lawmakers are starting to hammer out a rescue package to replace some of the expiring benefits earlier versions contained. Euro area leaders appear close to an agreement on stimulus, while the total size of the recovery package is in flux. An earlier proposal was for 750 billion euros, about $858 billion. The economic dislocation of COVID-19 triggered a tremendous response by fiscal and monetary policy makers, as well as central banks. That's Jane Tamazo, a portfolio manager at Columbia Threadneedle. These measures help to stabilize markets, yet we still find ourselves in an environment of continuous low growth. On the virus front, AstraZeneca jumped to its record after results from a vaccine trial were published, but the rally faded after analysis said the data, while good, weren't as stellar as hoped for. California, Florida, and Arizona all reported a slowdown in the increase of the new COVID-19 cases. Elsewhere, Italy's 10-year bond yield spread over Germany, a key gauge of risk in the Euro region, fell to the lowest level since March, while oil climbed above $40 a barrel. That at least is a positive one for Nigeria, noting how much we are always responsive to the crude oil price. But let's just take a note from what is happening in the global markets. We can just see that if the Congress and, of course, the fiscal authorities in the U.S. can agree on terms for extending the relief for Americans, UK can also agree in terms of how it manages the challenges of the jobless people, which may hit 4 million. And the euro can agree on the 750 billion euros recovery fund and effective management of the COVID rise in cases in the US, India, Brazil, and Russia. This could begin to show a good trajectory for the global economy. But most importantly, as we've been saying, the vaccines. AstraZeneca, very critical. Pfizer, partnering with German biotech companies. If we have those vaccines coming out quickly and the trial rates are improved and the recoveries are seen, it will begin to stabilize developments in the economy. So beyond the initial US-China trade concerns, we're now seeing the pharmaceuticals as key drivers of relieving the economies and easing activities. And we're also seeing how leaders in Europe, in US, in UK can agree to push economic activities forward. But most importantly to our viewers, we're seeing the strong nexus between the financial, capital market and the economy, because fiscal decisions taken has impact on the market, and also market activities has its own impact on how policymakers take their decisions. So it's not something that you want to miss. You follow all the updates on what's happening in Europe, in America, in UK, and of course, across Africa. We'll bring them to you and you just get them on the market review. So that's why it's very important to always join us and get insights on activities in the Nigerian market. Well, it's happening today, and it's a D-Day, the Financial Intermediation Operations and Practice, a guidebook for financial market operators and practitioners, will be formally presented today by 2:30 p.m. by Mr. Shea Adetumbi, the Chief Responsibility Officer of Value Investing and author of the book. It will hold through the digital platform and video conferencing medium Zoom. The event will feature capital market stakeholders, leaders, regulators, captains of industries, technocrats, and senior public office holders. The book will be reviewed by the Managing Director and CEO of NSD PLC, Mr. Bola Jomele, with Senator Ibikunle Amosun, Chairman of the Senate Committee on Capital Markets, Mr. Kayode Alabi, Deputy Governor of Kwara State, and Mr. Boyega Alabi, Deputy Governor of Osun State, featuring as lead presenters. The special guest of the event includes Alhaji Lamido Yuguda, Director General of the Security and Exchange Commission, Mr. Ruma Ote, one-time DG of SEC Nigeria, and Ms. Yewande Sadiko, Executive Secretary and CEO of Nigerian Investment Promotion Commission. The chief presenter of the book will be Chief Dele Fajimirokun, a distinguished entrepreneur who will be the chief presenter, while Dr. UJ Isweli, the chairman of Dubin Oil, and Mr. Tedopi Tosai, chairman of ANAP, will serve as special guest of honor. Dr. Alimi Abdul-Razak, the chairman of Forte Upstream, will serve as chairman of the event. This is one event to look at the market, to look at how regulators, stakeholders, policymakers can all come together to see how we can move Nigeria's financial and capital market forward. And this is a book that has been worked on and published during the pandemic. So if you're there, you're a broker, you're an investment banker, you're an analyst, and you've been contemplating about a book, I think this should spur you to come out with an interesting book that brings more knowledge and insight into the market, because investments, the markets respond to incisive decisions and information. Analysis is also very key. So books like this are welcome, and we hope to see how this will create much value. Information is very key in this period, and we'll look at that trend. Also this period, the leading private equity firm in Nigeria, Coronation Capital, is hosting its second edition of its corporate finance and business valuation online training. It started yesterday, and it's on today again from 3 p.m. and it's going to continue to 27 and 28, that's next week. Now, the fourth event is designed to provide participants with a deeper understanding of corporate finance, valuation methodology, and financial statement analysis, with a key focus on appraising the business impact of financial decisions on the organizational performance. The masterclass is headlined by globally renowned Professor Aswat Damodaran, a professor of finance at New York University, Stern School of Business. Over the years, he has been referred to as Wall Street's Dean of Valuation. I said he's been referred to as Wall Street's Dean of Valuation. So if you talk about valuation across the globe, you talk about Professor Aswat Damodaran. Yes. He's widely respected as one of the foremost experts on corporate valuation. Damodaran has published several books and articles on equity valuation and corporate finance and has been featured in the Journal of Finance, the Journal of Financial Economics, and the Review of Financial Studies. Professor Damodaran has been voted Professor of the Year by Stern's graduating MBA class 5 times and has been awarded NYU's Excellence in Teaching and Distinguished Teaching Award. Coronation is delighted to have such a very, very erudite scholar for the second time. But the interesting thing is this time is virtual. First time he was here physically, but this time is a virtual experience. And you know how innovation helps us to continue to improve over time. Whether you're in any part of the world, you can continue to have this session. So the Valuation Masterclass is a thought leadership and capacity building initiative of Coronation Capital. Lecture sessions will be hosted. And of course, it features an engaging one-on-one fireside chat that happened yesterday on various topics, including his views on global business environments and the Nigerian economy, opportunities for growth and investments. The financial guru is training employees of Coronation Capital as well as related companies in the Coronation ecosystem, which covers insurance, investment banking, asset management, technology, and venture capital, given that there is limited space to participation. But this is a very interesting forum. Let me just give you some insights from yesterday. I mean, yesterday was very interesting, the first day. It was interesting to note that valuation is a craft, not a science or art. That was one interesting note from Professor Damodaran. Also, it was interesting to note that in the issues of valuation, it is important that it is notable that it has a level of bias in terms of who pays and how it is directed. The notion before, the myth before was that there is no level of bias and all that. And then also, it was interesting to know that valuation has a very, very deep impact where there is uncertainty that is fixed. That means if uncertainty, macroeconomic uncertainties are fixed, it enables effective valuations. So think about it, economies like Latin America, where they have issues of uncertainties, say Argentina, for example, how do you think they will be able to make effective valuations? It will be a challenge. And those are the issues around the valuation industry. Those are things that corporate finance and business experts look at. Because in an environment where there is challenges of certainty, fiscal, monetary policy aligning together, then valuations are affected. And one very, 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 very key fact or takeaway was the fact that half of sovereign defaults in the last 50 years, according to Professor Aswad Damodaran, have been in local currency rates. And of course, when I heard that, I knew that Latin America, and he rightly mentioned Latin America as one of those major regions. Think of countries like Argentina, even prior to the eras of the military and trying to get into reforms, Brazil, Chile, Peru, all those countries defaulting in local currencies. Those were very, very interesting insights we got yesterday in terms of valuation. And so when you think you know much about valuation, there's a lot of insight that you can get. And so that will continue today. And interestingly, Professor Damodaran will be driving that process. There's so much rich content that comes from that stable. And this is courtesy of Coronation Capital. And this is showing how important the valuation of industries, valuation of the market is. And this also shows how corporate finance can evolve to be much better as a market. And just to also bring you some additional perspective to the things said about valuation yesterday, it also looked at the fact that a good valuation comes with stories and numbers. Now, it must have a story. It must have something connecting it. If I'm valuing a company, a bank, whatever, it must have a good story, and the numbers must relate, must understand the numbers. Very interesting tip. Also, a very fundamental part of the valuation quotient or presentation is the need to understand precise valuations. And also the fact that when you look at the discounted cash flow model this year, which is a new model evolving in corporate finance, the choices are between equity valuation and the firm valuation. Those are very interesting terms from valuation. But much, much deeper for even me when I listened to those yesterday's session was the fact that simpler valuation models do much better than complex ones. That stood out for me because we need to have a simpler valuation model which will help it to be more effective and not complicated. And for industries like Nigeria, huge industries, companies, all that, we don't need complicated models. We need simple valuation models that are very clear and we can really use to boost the industry. Don't forget that in a recent interview with Dr. Yoteriba, an economist, he said Nigeria has come to that point where we need to effectively value our assets. We're talking about debt, we're talking about revenue, but we have a huge debt capital of about $900 billion, which ProShare research brought to us. Has Nigeria been able to value all its state-owned assets? Do we know the value of our entire assets? How many subnationals can give you a total valuation of its assets? These are interesting times for those opportunities, but we need simple valuation models. And when we have that, it helps us to be very, to look at what we have, and then we can begin to talk about effective utilization of markets like capital market to liberalize our state-owned enterprises. Because if you don't know how, if you don't value your properties and assets, and you're going to the capital market to liberalize them, how would that add up? How would that create value? So valuation is a very critical part of the financial market and the industry, and Nigeria must brace up, must continue to create that room to encourage and also ensure that it promotes and supports simpler valuation models. So I've been able to tell you some basics about the valuation from what Professor Damodaran said yesterday. First, that valuation is a craft, not a science or art. Don't forget that. And that simpler valuation models do much better than complex ones. And don't miss that, because that's very important. And also, the environment, macroeconomic environment. When uncertainties are fixed, it helps valuations effectively. You don't want to miss that. Well, that'll be all for the market review today. I mean, this promises to be a very interesting week, and you don't want to miss editions this week because a lot of things are happening in the market, and we're here to give you all the analysis and insights. Join us throughout the week for that, reports, analysis, and exclusive interviews on developments in the markets. Also, this period, we like to once again tell our retail investors and all the Nigerian populace and all those who have interest in investment that in this period we must avoid all those who use digital platforms to rip off the hard earnings and savings of Nigerians. Ponzi schemes. I told you recently, Lebanon, part of its economic crisis is fueled by Ponzi schemes. So why would you take all your savings and hard-earned money to put in platforms that are not regulated or registered by the Securities and Exchange Commission? You lose all those investments just because you did not listen or take caution in your investments. We have programs like this. We have other related programs for other platforms and TV stations. You should watch and listen to how to make informed decisions. Take caution. Over the years, Nigeria has been susceptible to investment schemes, Ponzi schemes, and we've lost billions and billions. In this cycle of crisis, in this period of the COVID crisis, we're seeing a proliferation of platforms that promises you 100 to 200% returns if you invest money in it. Don't be swayed by them. Make the wise choice of watching programs like the Market Review on WebTV. Also follow updates from the Securities and Exchange Commission to know those platforms that are credible and you invest in. Also try to reach out to stockbrokers because they'll help you give you advice on investments that you should make. We can't afford to make mistakes again like this. We must make informed and wise investment decisions for the future, particularly for our children and for other benefits that we derive from them. And that's why we're here for you in Market Review, to continue to enlighten you and give you those required information. We'll make it a day tomorrow again by 10 a.m. this time. And I'd just like you to continue to follow the updates on the financial and capital markets as it relates to the economy. Till we come your way again, thank you for watching. Have a nice day and stay safe.